Anything other than a cult, this stock would be down 20% on this quarter right here. I'm just going to tell you that right now. This is an investing cult. You had $500 million in regulatory credits in a quarter. I mean, are you kidding me? Like, this is a joke.
This is a joke.
So right here, right now, we are challenged. The company's margins are going down a little bit more than what investors had hoped. That critical metric.
Dan mentioned cult stocks that always come undone. Do they always?
Yeah.
How about Apple?
Listen, Mel.
Wasn't Apple
20 years ago?
I remember getting hate mail.
Ford's, their E-division's losing $35,000 on a car. They're just ramping up on there. Tesla's making $10,000 per vehicle.
Tesla, my Tesla is the talk of the town, folks. Okay, we got one video and one video only to react to, and this one here today, folks. Tesla's biggest hater. Do you know which one it is of these four? Well, let me tell you. The old biggest Tesla hater used to be this guy right here. He used to be Tesla's biggest hater, but I would say over the past 12 to 18 months, he's I don't want to say he's gone bullish on Tesla, but he's certainly more toward the neutral side than he used to be. The biggest hater of Tesla that I've ever seen, he even beats Gordon Johnson. Okay, yes, you heard me right. This man beats Gordon Johnson. The biggest hater of Tesla's right here, and you're about to hear him go off. I got the full segment here. I recorded Fast Money on Fubo here, and I thought I would play this for you guys, react to this, give my opinion, perspective on this in-depth kind of piece. These guys sharing their opinions, but yeah, we'll hear it. So I hope you guys enjoy this as always. I appreciate y'all joining me. Thanks for being subscribed. 25,700 plus subscribers now on the channel.
Back following.
Thank you.
And we begin with an earnings alert on Tesla. The stock dropping after hours. EPS in line, revenue beat estimates, but after cutting prices 6 times already this year, margins for the EV maker coming in well below expectations. CNBC's Phil LeBeau is here to take us inside the numbers. Phil.
And Melissa, remember, the latest round of price cuts initiated just this week. So what we're looking at are Q1 results here. So this is just the impact of the price cuts that we're seeing in the first quarter. As you mentioned, EPS coming in line with expectations, a profit of 85 cents a share, revenue slightly better than expected at $23.33 billion. But the story is all about the margins. We said that going into today, the street was looking for margins basically 20% or above. This is the margin pressure they're feeling because of these price cuts. Compare year over year. That's a 900 basis point drop in total gross margins. A little bit better, but still a rough drop for the adjusted EBITDA margins down to 18.3%. And here's the reason why. Look at the change in pricing. And this is just from the beginning of the year for the Model 3 and the Model Y. Look at that. You've got the Model 3 now down to under $40,000. That's the base model price. And you've got the Model Y.
And the important factor to remember here, remember this, folks, then add on the tax credit on top of that. Oh, baby. Woo. Talk about smoking deal. Model 3, Model Y, smoking deal.
That's $65,000 for the entry-level model back in January, now down to $46,990. As a result, when you take a look at these results from Tesla, the big question for investors is going to be, where do the margins settle out? Are they going to settle out at 18%, 19%? Do they have any kind of idea when we listen to the conference call in terms of what they're expecting from the next quarter or two when it comes to pricing pressure? Remember, they are expecting to deliver, Melissa, 1.8 million vehicles. That's their guidance. They said during this report, and we'll get more on the conference call, they expect to hit their estimate of delivering 1.8 million vehicles. So that's not changing. But the pricing pressure and the margins, that's the story right now.
I guess, Phil, the question here is the pain worth it in order to gain that market share? You know, in an environment where the others are feeling pain as well, why not just put the screws on their competitors?
Well, and I think that's what they're doing. Look, it's much easier for them to put the screws on their competitors here in North America, where they don't have as much competition, especially at the lower end, than in China. China is much different story. It's much more aggressive in terms of pricing on the lower end. And remember, that's the part of the EV market that's going to be growing over the next decade. It's not above $50,000. It's the lower end of the market. That's really where you're going to see the competition.
Yeah, especially when you have BYD announcing an $11,000 electric vehicle. That's not easy.
Yep.
Phil, thank you. Keep us posted. Phil LeBeau with Tesla here, down about 3.6% on the back of earnings. Tim, what do you make of this news?
Well, I'm never going to be the guy that dies on the Tesla defense hill, but I have to point out that no one should be surprised that the margins are going down, and no one should be surprised that this is their strategy. They believe that they're still, when it's all said and done, going to have the best operating margins in the industry. A couple different brokers, I looked at, again, I echo Piper Jaffray has a report out there where they say every time wait times in Tesla cars go down to 4 to 6 weeks, they cut prices. And they cut prices because they know they can, and because they think they can outlast everybody else. This is offsetting EV credits that are going to lose ground too. So again, I hate the multiple. I don't need to chase the stock here. It's of all the mega cap tech stocks, it's the one that is still in its downtrend from November of 21. It has not broken back above it, and I don't see that it will. But today's, the margin number today, no one should be surprised by that. And Tesla should be arguing this is exactly what we want to happen.
Yeah, Karen?
So I see what happens in a slower economy. Let's say you're in a recessionary scenario. It's not like new vehicle sales stop, right? Look at how many new vehicles were sold just in the United States. We don't have to talk about worldwide. Just in the United States of America in 2008. You can look at 2009. You can look at 2010. You can easily Google, how many cars were sold, or how many vehicles were sold in the United States by year, and you can see it all the way back throughout the decades. And what you're going to find is still plenty of people even buy cars in recessionary scenarios. But when you're in a tougher economy, less cars are sold. And so we got a smaller pool to go after if you're an automaker, right now. And when you're a Tesla and you're being ultra aggressive with pricing, it makes it vicious for the competition. I mean, it's going to be tough to deal with Tesla over this next, I would say, 18 to 24 months, while we're in a slower time period for high ticket sales. I'm talking new homes, I'm talking cars, I'm talking furniture, I'm talking anything that's really over a $1,000 price point, and specifically things that are like you got to get a loan for, right? That's the main issue we're having right now. And so it's vicious to deal with Tesla right now. Absolutely brutal.
The stock acts pretty well given,
yes.
Actually. I'm sort of surprised that it's not down more. So like Tim, I'm not going to die on the Tesla hill. I wonder, though, about this continually cutting prices. At some point, do you train the customer to wait? Right? If you're a customer who bought a Y not that long ago,
right,
you're not going to be happy with this.
5 cuts ago?
5 cuts ago, exactly. You're not going to be happy about this. And I don't know, might they wait? I'm sure a lot of thought goes into the price cuts, no doubt. But it's a kind of it should be a worrying trend as we see margins go down, obviously.
Yeah, I would argue, along with Tim, that you shouldn't be surprised that you're seeing margins thinner and you're seeing some margin compression. But there was debate about whether or not they were going to be able to maintain around that 19.5%, 20% margin level, and they're coming in below that. Keeping in mind that these peaked out around 29% last year, right? So like year over year, that's almost a 10% decline in terms of margin. And then when you couple in the CapEx spend that they're ramping up, right? The further and further that you push this off and it becomes more of a volume story than a profitability story, the accretiveness of that CapEx spend gets pushed out. And that, to me, is why you're starting to see downward pressure on the stock immediately when a lot of retail investors have a tendency to buy on any type of weakness.
Then just one thing to add, though. All of this to get synthesize it, what's the right multiple? Is it in the mid-40s for an auto company? I mean, that seems really high to me.
For an auto company in the next technology of automobiles, right?
Right.
Here's a way to think about it before she goes on here, right? Think about it like this. If let's say it's trading at 4 times what the average auto companies is trading at, right? Let's say at a P ratio basis, a forward P. Let's just say it's forward P we're grading it on, okay? And let's say it trades at 4 times. Well, is Tesla going to grow 4x? Whatever that auto company is over the next, 5-10 years, right? And I think most people, if you know much about the auto sector, you're going to be able to confidently say, yeah, I think Tesla can grow 4x, if not 10x, or if not 100x, whatever their competitors are, right? Because a lot of their competitors aren't actually going to grow at all. They're actually going to see shrinking business, shrinking revenue, shrinking margins, shrinking profitability. While Tesla is going to see increasing all that, except for margins really this year. But I wouldn't be surprised if even next year they start to uptrend those margins again.
Technology that the others are trying to catch up on. True. It's got the pole position right now. It's got the edge in terms. And I'm just playing devil's advocate. Nobody's dying on the Tesla hill here. Certainly not Dan.
Let me give you before Dan jumps in, because I know he's got a lot.
One with the edge of the battery technology. I mean, maybe for these reasons, it deserves that multiple, because catching up on that technology aspect is going to be so difficult for the legacy automakers.
Well, one other thing that, again, I'm not dying on this hill, but they're talking about growing 50 50% CAGR in terms of deliveries, the more they grow, and they said this, they said Q1 profitability was positively impacted by growth in vehicle deliveries despite margin headwind. They're going to argue economies of scale, and we're going to crush people. And again, are they doing it? So far, they're kind of doing it. That's the argument against it, economies of scale. All right, Dan.
Get in there. What do you think?
Ooh, okay. Here we go. Juicy time. Let's make sure the volume's all the way up. Oh, boy. Here he goes.
Anything other than a cult, the stock would be down 20% on this quarter right here. I'm just going to tell you that right now. This is an investing cult. And so when you look at you guys are saying that people were not surprised by the margin degradation. Why was the street consensus at 21% or something like that? Why is it? I mean, like, seriously.
So they cut this week. I don't know. I think a lot of the street expected this.
In any other consumer product where it's been an earnings story, a margin story, a free cash flow story, if you had an estimate of $3.2 billion in free cash flow and you printed 441 and you had $500 million in regulatory credits in a quarter, I mean, are you kidding me? Like, this is a joke. I mean, so in any other growth story, when you have this sort of like just turnaround in the fundamentals of the company and you can argue away whatever you want, they've cut their price. How many times in the last 10 years have you guys seen a company cut their prices in a market leading product 6 times in 10 years, let alone 6 months? Okay. So listen, have at it, people. Go buy it. I'm sure it'll be up on the opening tomorrow. This stock is very likely to go back and retest those lows where it was.
But they are growing. I mean, and again, it feels so awful to be going on the opposite, but this is what we do on this show. So here I am saying they are growing. I mean, they're growing dramatically. I mean, they're growing in terms of their profitability. They're growing in terms of their deliveries. So if you think it's a growth story, if they're going to grow at 50% a year for the foreseeable, and they've kind of been very vague about this,
right here.
I'm not saying that though. I mean, come on, I'm not going to go buy the stock.
You can see why people might.
Yeah.
You can see why people might.
Well, they will.
And you can't see why people might.
Well, I don't know why this is such a special story. I think that article in the Wall Street Journal the other day talking about this Shanghai auto event where, there's literally dozens of local manufacturers of EVs there. And you just mentioned the Boyd at 11,000 or something like that. I mean, they didn't show up because they got nothing new to show, okay? And they have tons of competition. So I think China is really, and we've been saying that on this desk, I mean, China's a real problem for them. I mean, it's a huge problem because so much of their growth is expected to come from there at a time where All
right, before you go further here, Dan, okay, let me show you something a little, just slightly special about good old Tesla, my Tesla. All right, Dan, so on top of, obviously the whole auto market moving toward EVs and that whole wave and Tesla being at the forefront, technology, their employee force, all those sorts of things, let's just look at the numbers, okay? $2 billion in revenue in 13, $3 billion 14, $4 billion 15, $7 billion 2016, $11.7 billion 2017, $21 billion in 2018, $24 billion 2019, $31 billion in 2020, $53 billion in 2021, $81 billion in 2022. This company has scaled in less than a decade from $2 billion of revenue to $81 billion in revenue in less than a decade. They've gone from gross profit of $456 million to a gross profit of $20 billion plus in less than a decade, okay? That is, let's just call it fairly special, in all due respect, Mr. Dan Nathan.
We've been talking about competition in Detroit. That's not even the story. The Germans, that's not even the story. It really is about China and future growth. And
so now they've given up on competition in Detroit. Now they've given up on competition from the German automakers, right? Now they're saying it's China. But that's funny because that's a different take, because 5 years ago we could go back and everybody was talking about Volkswagen's going to do this and, Ford's going to do this and GM and all these, yeah. And then Toyota, what is Toyota doing? I don't think they're even doing anything in relation to EVs right now.
I do think it's interesting. Last week, before they decided not to go to this event, I don't know when they decided not to go to this event, but they announced another gigafactory in Shanghai. But they're also going to start paying much higher taxes, and they're going to have much less favorable treatment in China than they have over the last few years in the next few. So, I mean, listen, if your antennas are not up about this story right now from a fundamental basis, then I think you're doing this wrong.
I think the chart is also really important. Again, we've seen this inflection where at least somewhere in March, really before we started to see triple Qs, we saw the biggest names in the mega cap tech world outperform the S&P and actually break out of a downtrend that was very defined either from November of 21 or January of 22. Tesla has not done that. It's had a few moments where it's gotten, but again, it got smacked down at 200, it got smacked down at 260, and you look at this chart all the way back, it tells me it's going to continue to get smacked down. So no, I don't want to chase it, but it's just interesting to me for a company that nobody cared about fundamentals for a long time. And I argued that side of it too. I mean, I found the company to be, and I don't trust anything they say.
Okay, see, now you're starting to see Tim. He doesn't trust anything Elon Musk says. The company says, you know, he's trying to stick up for Tesla, but sure, over time your negativity bias definitely can shine through, right? But you heard what he said there. It's a very important point.
It's going to continue to get smacked down. So no, I don't want to chase it. It's just interesting to me for a company that nobody cared about fundamentals for a long time.
Nobody cared about fundamentals for a long time. What type of fundamentals are we talking about, Tim? Okay, are we talking about what I just showed you there? Gross profit going from 456 million to 20 billion plus. Revenue going from, 2 billion to 80 billion plus in less than a decade? Or is that the fundamentals we're talking about? The technology, the product? Like what fundamentals are you talking about here, Tim? I'd love to hear that. You say maybe people didn't care about valuation. That's fair, but fundamentals, what are we talking about here? In terms of Tesla investors, I think they're the most caring about fundamentals and what's going on with the company than anybody else, even more so than short sellers.
And I argued that side of it too. I mean, I found the company to be, and I don't trust anything they say. I think the corporate governance dynamics here are things that really make it frustrating to follow this stock because they've sent a lot of misinformation.
Just to be clear, no one cared about valuation. They cared about the fundamentals, and they were right. And you were talking about this free cash flow story and their ability to kind of work on that balance sheet. Okay, let's be fair. Okay, they are not in a situation where many of their competitors are, where they're burning billions and billions.
They've got 22 billion of cash and cash equivalents, as they just said, on their balance sheet right now. So they're
totally. So, but my point is like all of this happening without a recession. Okay, so think about what happens to this company that has a very high price point. They've told you, we know they have a high price point. They keep cutting prices on their cars to be more competitive with some of these other providers. The last point I'll make is the conference call is going to start at 5:30, and you just said it. You don't trust anything that they say. They are going to be overly optimistic about their ability to then have some pricing power once they recapture share, once they get some of these factories going. That's going to be the story, and that's probably why you'll see in 40 minutes we're going to be talking about how the stock is unchanged.
They'll mention new products. They'll have a couple sweeteners.
Yeah, we're just in a new environment. Right? We're talking about the past, and you talked about Tesla coming down from whatever it was, 400 to 300 to 260. We're in an environment where it was growth, and it was growth at any cost, and we have drastically shifted. And I think to Dan's points and both of your points that you've made there, I think now, like you said, it is all about scale. They are admitting that we can no longer continue this narrative of growth at any cost and expect to protect margin or to protect valuation. So they are going all in on CapEx spend. They are going all in on being able to scale. And to me, that really is the transition story now. I don't know what else you would expect them to do when we're seeing margin compression across the board. They have no alternative but to go and compete at the lower end of the market and try to blow competitors out of the water, because that really is the only story that leads to continued growth that investors are going to be willing to pay for.
By the way, Ford was down 4% today. I mean, it's not like the auto sector is on fire.
Yeah.
And if we call this a car company, I'd call it a car company. It's not been a great time for Ford or GM or look across the pond.
Yeah. For more on Tesla, let's bring in our Fast Money friend, Gene Munster, managing partner at Deepwater Asset Management. Gene, great to have you with us. We've been having a robust debate here on the desk about Tesla. Where do you think we are in the Tesla story right here, right now?
So right here, right now, we are challenged. The company's margins are going down a little bit more than what investors had hoped. That critical metric was EV gross margins ex EV tax credits. That came in at 19%. It could have been 20% based on some accounting of some advanced credits for manufacturing. We'll have to wait for the call, but that's an important distinction. How people are going to view this quarter. If it could be a 20% number, investors will feel good. If it's 19, they don't feel good. So to answer your question, near term, they are feeling the pressure here, and it is impacting their business. And I want to jump back to an important point that Dan made about the cult piece of this story. And I think that is the reason why cult followings happen on growth companies is because a group of investors believe in where a company is going. So it's beyond the current quarter, to your point, Melissa. And I think that's really the hinge factor and going to be the X factor here in terms of how this plays out. If, in fact, they can proceed on their growth, we can talk about what that growth strategy is. I think that the stock moves higher. And I think that's ultimately, it's going to drive, I think, some of the Tesla bears mad here over the next couple of years, because there will always be this carrot out here because they're getting into some massive markets, always this carrot out there that Tesla is going to be able to turn the corner and really hit some new growth vectors.
So Gene, again, a $570 billion market cap company that's down from $1.2 trillion at the end of 2021 here. And again, you just heard us kind of talking about this. I mean, there is clearly a change in the fundamentals in what's going on with the company. Even when the stock was careening lower in 2022, they weren't cutting prices there. And they sounded pretty confident about their ability to manage supply chains coming out of this uncertain period. They're still calling it an uncertain period. And we haven't even had the, the recession that we're all expecting. So I guess my question to you is, you've covered high growth, high valuation, tech companies in the past here. What's different about this one? Because as long as I've been in the...
He mentions, we're not even in the recession, right? The coming recession. In high ticket, we've been in a recession for a year now. Actually, technically a little over a year. Just because people are spending at the restaurants and spending on concerts and stuff like that doesn't mean we haven't been in a recession. Because the bottom line is, look at home sales. Look at home sales the past year. Tell me that's not recessionary. Look at auto sales. Look at how weak auto sales have been. Tell me that's not recessionary, right? In terms of the volume coming through versus, past years. Look at normalized time periods like 2019. Don't look at versus the Rona year. Look at 2019. Look at 2018 versus what 2023 is going to be. Come on, man. Look at furniture sales. Look what furniture companies are telling you, right? High ticket, not doing well. Luxury goods, not going to be doing well over this next year. And so I just think there's already been a recession going on in this particular space of loans, of anything, high ticket.
Every single time there's been a special story like this with a special guy like Elon, it's always come undone. And I'm just not certain down 55% really means that that's it, that it's come undone and that's it. And we can get back to, just not caring about valuation and let it start working again.
Well, I'm not certain how this ultimately plays out, but one of the reasons why I think what's most important here is just the trajectory of margins and growth. And you're absolutely right, is the fundamentals have not looked good. This has been a downward trajectory, especially on margins. But to answer your question, what could reverse this ultimately is that I still believe, and this is going to be one point that's going to be hard to probably shake me from. I want to be a level-headed in all this, but I still think traditional auto is in a tough spot. Ford's their E division's losing $35,000 on a car. They're just ramping up on there. Tesla's making $10,000 per vehicle. So to answer your question is, if they can continue to do what they're doing, being profitable at going after what I see as some large addressable markets around energy and transportation, storage, I think that the story can turn around. And so the Elon factor, agree. He's a wild card, but I think the markets that they're going after are so big that this company can continue to move higher.
But Gene, going back to something that you said earlier, basically in the next hour or so, when we get clarity on this margin, if that margin moves to 20% because of advanced credits, then we can say that it actually met expectations. It could be a completely different story for the stock.
We are splitting hairs around that. Another factor on the call here is related to Elon's comments about their growth. If Elon's even on the call, but last quarter, of course, Elon did a very Elon-like thing. Their guidance was 1.8 million vehicles. And then on the quarter, he said, I think it's going to be closer to 2 million. They reiterated their 1.8 on the just reported numbers. Is he going to reiterate his 2 million number for the full deliveries for 2023? That, along with the margin, that margin detail about advanced credits, that's going to probably make or break the stock tomorrow. But longer term, it's can they successfully scale into what I see as large markets?
All right. Thanks, Gene. Keep us posted on any developments. Gene Munster, Deepwater. Dan mentioned cult stocks that always come undone. Do they always?
Yeah.
How about Apple?
Listen, Mel.
Wasn't Apple
20 years ago?
I remember getting hate mail constantly whenever you said anything bad about Apple.
Yeah, and it's gotten cut in half.
That was like if looks could kill right there. Holy smokers, that was no joke. Did you see the way that man looked at her? Did you see that? Oh my God.
That always come undone.
If looks could kill.
Do they always?
Yeah.
How about Apple?
Listen, Mel.
Wasn't Apple
20 years ago?
I remember getting hate mail constantly whenever you said anything bad about Apple.
Yeah, and it's gotten cut in half numerous times over the last 10 years, but it's kind of a different business. Here's a company that's been able to maintain 40% gross margins for that entire time, okay? And they have 90% of the gross margin in the smartphone business.
But they were doing that at production of like no vehicles, right? I mean, they were that's the argument. I also think that the getting credit for being a more efficient, higher production producer is part of what goes on at any company. But, look, Netflix was a cult stock that got knocked off its pedestal. I think Amazon's a cult stock that got knocked off its pedestal. Some of this is just economies of scale.
Obviously.
And then recovered, but I mean, I'll buy the stock at any multiple no longer works on Amazon. Right. Work on Netflix. So, I mean, at some point, valuation does matter. And what I find interesting is that even the biggest, most ardent bulls are now referring to this as an auto company. It's not, it's not about batteries. It's not about storage. It's not about data. It's an auto company. And
did you see the storage numbers? Did you see the battery numbers? Oh my gosh. I mean, we're talking about insane records in that business for a quarter that's usually traditionally very weak. And I went over that on the main channel, on my main video today, where we went super in depth on the numbers, right?
I think it's too expensive.
Listen, it took 14 years for the NASDAQ to get back to its bubble high. Look at a Microsoft chart for the entire 2000s. It went sideways in the tightest range imaginable. Okay, so all of these things, if you go look at Google, there were times, this stock went sideways, down considerably from their all-time highs. So to me, just because this thing shot up 10,000% and then lost 75% and now it's up, 70% or something like that, it's still down 55% from its highs, and the fundamentals are about as bad as they've been in the last, I want to say easily in the last 5 years, other than the period of the pandemic where every company had very little visibility and their business models were, up in the air. So
after the break, we've got more after.
Bad comp, for Dan to say, Microsoft did this. I've always said this, okay, if you want to comp Tesla against somebody that's a historic company, comp them against Amazon. They're the closest thing to reminding me of Amazon, right? Two totally different business models, but the way the CEOs run those companies, the way their thought process are, Jeff Bezos, Elon Musk, and the way they kind of execute remind me so much more of Amazon. And Amazon just always focused on growth. Microsoft, not really so much. They really were focused much more on profits, right? Steve Ballmer led Microsoft during that era he's talking about there. Before Satya Nadella took over, there was a Steve Ballmer era. Steve Ballmer era was much more just about running the business as a business and, making the profits and those sorts of things. It wasn't really about, they missed out on so many tremendous opportunities of innovation. They missed out on really like the iPod opportunity. They missed out on the iPhone opportunity, right? They let Apple snag all those massive businesses. They weren't forward-looking. Tesla's always been forward-looking, and so they've always reminded me much more of an Amazon than a Microsoft, okay? That's all I'll say about that. And by the way, Microsoft, much more respected, in my opinion, nowadays than when I first got in the market back in 08, 09. Much more respected company. Satya Nadella has done a phenomenal job with them. Steve Ballmer era, Bill Gates era, Microsoft did its thing. Satya Nadella era, Microsoft did its thing. Steve Ballmer era, I mean, it's just, he wasn't really that guy, in my opinion, and obviously it showed in the stock price performance, during his tenure at that company. So appreciate everybody joining me. As always, love to know your guys' opinion. If you want to support the channel, support it on Patreon. That will be linked in the description area. You also get access to see all the moves I'm making out there in the market. If you want to follow me on Instagram and say hello, it's Financial Education Jeremy. That will also be linked in the description area. Much love as always, and have a great day.